Alright, so everyone, welcome back to the Crown Traders Forex Beginners course. I am Joseph, and if you watched the last video, you know what Forex is, how it works, and the history of the financial market. So today, we're going to be getting acquainted with basic Forex terminology, things like pips, lots, leverage, and margin. It's super easy, yeah? So don't worry, I'll make them simple so you will never forget them. Okay, so what is pips? The pip is just a tiny movement in the price of currency. It shows how much the price has gone up or down. For example, if Euro USD moves from 1,100 or 1.1000 to 1.1001, it moved one pip, like saying the price took one little step. Think of pips as the steps or points that tells us how far the price moved. So when you make profit in Forex, you often say, I made 20 pips today. That means the price moved 20 little steps in your favor. Time number 2. What is lot? A lot simply means the size of your trade in Forex. So in Forex, you can trade one standard lot, 1,000 units. Yeah, so 1,000, one standard lot is equals to 100,000 units, while one mini lot is equals to 10,000 units, and one micro lot is equals to 1,000 units. You don't need to remember the numbers, just know this. The bigger the lot, the more money you can make or lose, and the smaller the lot, the less money you can make or lose, but the safer it is for beginners. See? So number 3 is leverage. What is leverage? Leverage is like a helping hand from your broker or liquidity providers. Imagine you only have a $10 funded in your account, but your broker allows you to trade as if you had $1,000. That's leverage in action. If your leverage is 1:100, it simply means for every $1 you have, the broker lets you control 100 in the market. So if your leverage is 1:500, it simply means for every $1, the broker allows you to control up to, in potential, $500. If your leverage is 1:1000, it simply means for every $1 you have, the broker allows you control $1,000 in the market. Sounds powerful, right? It is. But remember, leverage helps you make bigger profits and also helps you make bigger losses if you are not careful. So always use leverage wisely. Yeah? So number 4 is margin. Are you tired of losing trades, chasing signals, and struggling to find consistency in the Forex market? Hello, welcome. I am Joseph, the Crown Trader, with 9 years plus experience in Forex trading. I have mentored students across Africa and the entire globe, helping them trade with clarity, confidence, and profitability. At the Crown Traders Academy, we teach principles, simplicity, and profitability. This is no gimmicks, just real Forex trading education that transforms how you see and trade the market. Our complete mentorship program is valued at $1,000, but for a limited time, we are giving a whopping 80% discount. That means you pay only $200 to secure your spot and lifetime assets with the following condition to have access to our SRA trading model. Do this. Number 1, click on any brokerage link in the description below and register. Number 2, fund your registered account with at least $50. Number 3, send a screenshot of your $200 for your mentorship and your $50 funded in your trading account via WhatsApp to be added to our global mentorship group. Join the Crown Traders Academy today, where we empower traders, transform life, build ethical wealth across Africa and the globe. Register now. Offer ends soon. See you on the other side. Blessings. Margin is the small amount of money your broker keeps aside when you open a trade, or better still, it is the minimum amount required for you to have a trade running in your trading account. So it's like a deposit. The broker says, hey Joseph, I'll let you control $1,000 in trades, that is leverage, but I will hold $10 from your account just in case. That $10 is your margin. It's not a fee. You get it back when you close your trade. So margin is equals to the safety money your broker holds when you are trading. Let's recap this very quickly. Pips is the tiny steps in price movement. Lots is the size of your trade. Leverage is the helping hand from your broker to trade bigger. All right? And then margin is a small deposit that keeps your trades open. When talking about margin, I'll give a very quick example. You have $100 in your account and you have running trades in those accounts, and the trade has a floating loss of, let's say, 50. And if you check closely on your MT5 or MT4 trading platform, you will find out that there is a point called margin, equity, and balance. Those are the ratings or the levels of your trading account. Now, that margin, you will see the amount. Let's say for that account, $100, the margin that the broker is allowing you go, that is, your trade should not go in total losses. It should not go below, floating loss rather, it should not go below, let's say, $10. So if your existing floating loss is $50 and it gets to 90, 91, your existing trade will start closing. Your highest losing trade or position will start closing from that highest point to the lowest, so that the capital can be secured. That $10 loss, that $10 margin will not be exceeded by your brokerage. I hope you understand that very clearly. Now, these 4 terms are the foundation of Forex. Once you get them, everything else starts to make sense. In the next video, we'll dive into how to read the full Forex chart and understand candlesticks. But before you go, open your free Deriv demo account using my special link below and start practicing these concepts. Join the Crown Traders mentorship program, where we break down Forex in the simplest, most practicable way. Okay? Now, thanks for watching, and remember, we don't just trade the market. We empower traders to transform lives, build ethical wealth across Africa and the globe through principles, simplicity, and profit. Blessings.